We gotta talk, guys. We have to talk. Today was no freaking joke. NASDAQ down 4%, Dow Jones down 3%, S&P down 3%, Bitcoin down 4.5%, Ethereum down 8%. Today was a bloody freaking massacre. What caused this massacre in the crypto market and in the stock market? Quite simply, the economy. Jerome Powell, who's the head of the Federal Reserve, had a speech today at the close of the Jackson Hole Economic Summit. In this speech, everybody was paying attention to what Jerome Powell was saying. Before the speech happened, everybody was paying attention to the federal funds rate. The federal funds rate is very simple. That's the interest rate that gets passed down to the entire economy. And this gets trickled down to your mortgage rates, your credit cards, your car loans, your student loans, unless you're forgiven by Biden. And you get the gist of it. It is the cost of money. Interest rate is the cost of money. The higher the interest rate, the more expensive money is. The lower the interest rate, the cheaper money is. The cheaper something is, the more you spend of it. You see, inflation can be broken down into two parts. You have demand and you have supply. As you have a constant supply and a constant demand, you have an equilibrium. However, if this demand stays the same, but the supply goes down, well, now you have inflation because people are willing to spend more for the goods that they can get their hands on because there's not enough goods to go around. However, if you now increase the supply and the demand lowers, well, now you're going to have something called deflation because there's more of something than there are people willing to pay for it. Eventually, you're going to get an equilibrium. The Federal Reserve cannot control the supply, but the Federal Reserve can control the demand. They control the demand by raising or lowering interest rates. This is called the Federal Overnight Funds Rate. Federal funds rate is at 2.25% to 2.5%. During COVID, it was just at 0%. Very, very cheap to free money. The last two Federal Open Market Committees, the Federal Reserve raised the interest rate by 75 basis points. As you raise the interest rate, not only does this affect inflation and demand, but this also affects earnings, and then you get something called an earnings recession. Because just like you, a regular person, regular civilian, huge mega cap corporations also borrow money. They also leverage money. And at the end of the day, they need to pay interest on the debt. The interest that they pay is in the millions and tens of millions and even more money. So obviously, the smaller the interest rate, the less they need to pay, and their profits go up. But as the interest rate goes up, they have to pay more and their profits begin to shrink. And this is what we call an earnings recession that we currently have. The federal funds rate was raised twice. This was a record. In 30 years, we did not raise the federal funds rate by 75 basis points, let alone two in a row. There was around a 60% chance, so Wall Street bets on everything. They bet on the federal funds rate and how much is going to be raised at the next meeting, which is going to be at the end of September. There was around a 60% chance, or people bet, that it was going to be a 50 basis points rate hike and a 40% rate hike and a 40% chance that it's going to be a 75 basis points rate hike. After today's speech, Jerome Powell made it very clear he's going to do what he has to do. Inflation, we're not sure if it peaked or not. And although one CPI report came down lower, the last CPI report came in at 8.5%, the report before that 9.1%, he said that is not definitive and that is not conclusive that inflation is in fact going down. However, the next Federal Open Market Committee is at the end of September. In the middle of September, we're going to get the next CPI report. If the next CPI report is going to come above 8.5%, you can expect not only will we get 75 basis points in the next meeting, we're probably going to get 75 basis points in the meeting after that. But if inflation does in fact start going down, including the next CPI report, And then the following CPI report, which is going to come out before the next meeting, you could expect that the next meeting after this one coming up in September is going to be a 50 basis points rate hike. When that happens, and I'm going to really stress this word if and when, if inflation does in fact go down this next CPI and PPI and the following one, then I could definitely see that the worst in the market is going to start getting behind us. One of the bright things that Jerome Powell did say today was that if inflation does conclusively start going down, you could expect in the future, not only won't there be rate hikes, there will be rate reductions. That rate reduction is when there's going to be an enormous bull market. You see, while Wall Street gave it a 60% chance of a 50 basis points and a 40% chance of a 75 basis points, here on Adam Bergman's show, don't forget to click like, share, and subscribe. I've been saying in my mind, it's a 100% chance for a 75-point basis hike. This entire time I was preparing for this. I thought this was going to happen. I shared my ideas, my thesis, and my thinking behind this. No, I'm not a genius. And yes, there's hundreds and thousands and even more people that thought the same thing. I just share my personal ideas. The market today suffered. The market suffered immensely. This whole week, the market was also suffering. I think we had one good day out of 5, if I'm not mistaken. Now that we know what's going to happen, Wall Street bets for the future. Before we actually get into a recovery and before interest rates actually start getting reduced, Wall Street will rally. Now, the key for you and me and any investor is to time the market correctly. And I don't mean time the market of catch a falling knife or catch the peak or the lowest, right? You got to preemptively think what's going to happen. And that's what we're doing right now. The only difference is I'm doing it, open-minded. I'm doing it like on air. I'm doing it so that people could double check me later on. And it's a little difficult, but that's okay. I don't mind sharing my ideas. You have to try to predict what's going to happen and see what Jerome Powell was saying. Trust me, Jerome Powell does not want to be raising interest rates. Jerome Powell is one of the most hated men in the world. People quickly forget about inflation and people slowly but surely start hating you because you're the person that ruined the stock market. Now you're the person that ruined not only the stock market, but also the crypto market and soon to be real estate market. If we know that he's going to be raising 75 basis points and the CPI happens to be going down this next report and the report after that, you can start planning for 2023. Because in 2023, probably in the third meeting of 2023, the federal funds rate will start getting reduced. So that means sometime in the second to third quarter of 2023, I personally believe that the stock market is going to start rallying and the stock market is going to get behind all of this. People are going to say, Adam, but what happens to inflation? And to this, I'm going to say, we are buying time. Eventually, there's going to be an equilibrium. As we're reducing demand, we are also increasing our capabilities of supply. Eventually, if you do lower the interest rates again, you can increase the demand because there is now an increased supply. This is what I think is going to happen. Now, this entire time, gas prices are going down. Crude oil is going down. Food supplies are increasing. And the housing market is starting to decrease and get softer. All of this is inflationary or deflationary measures. In this case, deflationary. Inflation is going to keep going down. If you believe inflation is going to go down, then you must believe that in 2023 is the time that Jerome Powell and the Federal Reserve will start lowering interest rates. So what happened today, it sucks. It sucks tremendously. Your job is not to dwell on what's happening right now. Your job is to try to preemptively predict when, where, what to put your money into in preparation for the next bull run. And as always, I'm going to tell you the best possible thing you could do is DCA, dollar cost average, because you don't know what's going to happen. I hope some of the words that I said on this show helps you in some way, shape, or form. But always remember, none of this is financial advice. This is purely 100% entertainment and education only. And whatever I'm saying, you shouldn't be listening to, and don't listen to any personality on YouTube or any social influencer. Everything I say and everything anybody says on the tube should be taken with a grain of salt, and you should use it as a stepping stone to do your own research. I'm giving you the basic information. Now you take the basic information and see if it holds true in your thesis or not. So I can't give you advice, but I will strongly urge for you to do your own research. We're living in a crazy, crazy time. There's going to be a lot of millionaires made, a lot of wealth transferred, and the people that can think outside of the box and preemptively plan for things like this are the people that are going to make a shit ton of money. And you can quote me, a shit ton of money. Guys, thank you so much. I hope everyone's going to have a fantastic weekend. I hope this little economics lesson helped you in some way, shape, or form. And in return, to say thank you for this little economics lesson that should be used for purely entertainment and education, please give me the likes, the shares, and the subscribe. And if you need some free stocks, I have a link to Webull down below. They're giving out 12 free stocks. It's a win-win situation for both of us. Thank you so much. I'm going to go hang out, go get some dinner. The Berg is out.